So, what if a crypto company could act more like a blue chip stock? You know, paying you actual dividends while its core assets are out there generating massive digital returns. Well, that's pretty much the idea behind BitMine's big transformation. They're aiming to become a new kind of crypto yield machine. Let's break down exactly what that means.
And this really raises a huge question. Is this the new blueprint for how public companies should handle crypto? We're going to dive in and see what's really going on under the hood here.
Okay, so the core idea is this. BitMine, ticker BMNR, is no longer just a company that digs for Bitcoin. It's evolving. It's turning into what you could call a hybrid crypto utility, one that blends the old world of traditional finance with pure crypto-native yield.
So, how are they pulling this off? Well, it all starts with them unlocking a massive and frankly dormant asset they've been sitting on for a while.
It all begins with this number. BitMine holds a staggering 3.6 million Ethereum in its treasury. Now, to put that in perspective, that's over 2.5% of the entire ETH supply. We're talking billions of dollars. And until now, it's mostly just been, well, sitting there. And that's where Ethereum staking comes into play. If you're not familiar, it's basically the crypto version of putting your money in a high-yield savings account. You lock up your ETH, which helps run and secure the entire network, and in return, the network pays you rewards. Simple as that.
And this right here is where the numbers get absolutely mind-boggling. Just by putting their existing treasury to work, they could generate over $400 million in annual revenue at today's prices. And look at this. If ETH hits $10,000, that number jumps to over $1 billion a year in passive income, flowing straight to the bottom line.
But look, this isn't just about flipping a switch and watching the money roll in. It's about how they're doing it. They're building something they call a Made-in-America moat, which is a unique competitive advantage designed to protect them from all the risks that plague the rest of the industry. You can really see the key differences here when you put them side by side. While their competitors like Mara and Riot are pretty much pure-play Bitcoin miners, BitMain is diversifying with its own ETH staking operation. And notice two absolutely crucial details here. It's all US-based and regulated, which is a huge deal in today's crypto world. Plus, they're paying a cash dividend, a first for a company this size in the space.
Now, the foundation of this whole moat is something called MAVAN, the Made-in-America Validator Network. Think of it as their own private, high-security staking operation. Because it's fully domestic, it gets to avoid all those messy regulatory gray zones. It's institutional grade, built from the ground up just for their treasury, and the big goal here is to become the cleanest, most compliant way for public investors to get exposure to Ethereum's yield.
So what does this all actually mean for the shareholders? Well, it creates this really powerful combination, a traditional cash dividend that's being backed by a new age digital yield.
First, let's talk about the traditional part. BitMine announced a 1 cent per share annual cash dividend. Now, I know that might not sound like a lot, but it is historic. No other large-cap crypto company is doing this. It's a signal of stability, a commitment to returning capital in a way that traditional investors totally get.
But then, you see this number. That 1 cent dividend is the signal, but the almost $17 in potential value created per share from staking, well, that's the real story. And this is the most crucial point. The new crypto-native yield absolutely dwarfs the traditional dividend. It's not even in the same league. So, for an investor, this creates what they're calling a double yield. First, you get that small, stable cash dividend, check. But at the same time, you benefit as the company's treasury grows from those massive staking rewards, which in turn should enhance earnings and boost the overall share value. It's a real 1-2 punch.
Okay, so this all sounds great in theory, but when is it actually happening? Let's take a quick look at the roadmap for 2026. So the initial announcement just happened. The next major event to watch for is the shareholder meeting down in Las Vegas on January 15th, and then the big one. The MAVN network officially goes live and starts generating that sweet, sweet yield in the first quarter of 2026. And you have to understand, all of this is timed against a very bullish backdrop for crypto in general. The company's chairman, Tom Lee, he believes the peak of this crypto cycle is still 1 to 3 years away. That suggests they're positioning themselves right now to capture the bulk of the coming upside.
Which, of course, brings us right back to our big question. By combining a massive treasury, a regulated US-based staking operation, and a shareholder dividend, Has BitMine actually created the new blueprint for what a mature public crypto company should look like? Honestly, only time will tell, but you can bet the rest of the industry will be watching this very, very closely.